Alright, quick update on MIR. So it's been a little while since I covered this, maybe a week. I have been checking this out, day to day, but I haven't found too much of a need to make an update because, what I said in the last video is still valid. Your moon line, in my opinion, is a daily close above the 200-day moving average, which is approximately at 223. You can see we had a strong impulse up to there yesterday. Also, I've just moved over the trend line. We had it something like this before. Nonetheless, the kind of general uptrend that we've got going for MIR right now is still very much in play. We have, let me get rid of this so I can see where our 618 is. Our 618s are still down here. We've got one orange line. It's been a while since I covered this, so I forgot which one's which. So is this two? Were we looking at this on the 4-hourly? I'm trying to figure out where this this second. Okay, so I think we must have. No, I don't know why this is here. So let me move this over. Let's get rid of this. This isn't even a previous low. Yeah, I've got no idea what that's doing on the chart. But nonetheless, your 618, this is where we need to keep our eyes on. While we're above the 618, I still think MIR is bullish. So keep your eyes on 156. If we come back one more time for a back test, I'd really want to see a strong impulse off the 618. I really don't see a possibility of us coming down, back testing it, heading up, back testing it again and holding it. For the very simple reason that we've back tested it, once. Well, let's call this one back test because, we came down here, back tested it and pushed up. We back tested it once, twice, had an impulse, 3 times, impulse, 4 times, fallback 5 times, 6 times. So basically the moral of the story, if you don't know, support and resistance gets weaker and weaker the more you test it. And that's the same on the upside and it's the same on the downside. If we were at the top of this, I can kind of see this being like a ascending triangle type pattern. Yeah, I'd probably draw it like this. I think this is quite valid on the daily. For example, if we were, doing the opposite and we were smashing here, smashing against the top of this this resistance, I'd be saying, the more we test this resistance, then the more likely we are to break it. It's the exact same on the downside. The more we test support, down here, the weaker and weaker it gets. So I think we've backtested this 618 way too many times, in my opinion. I would not want to see more than one backtest of the 157 again, because I think if we come down, backtest the 157, and we don't immediately start, breaking out of this pattern, then I really think it could get very sticky and we could potentially have a throwback to the lows. So that's all I see for MIR. I'm still sitting on the sidelines. Like, I'm waiting for us to come up to this 200-day moving average, because I really don't think we're out of the water until we're above the 200-day. I've highlighted this before. This 200-day was basically very strong resistance. We kind of came up near it. We never, fully came up to it, but you can kind of see this was trending down and we were never able to get above it. So in my opinion, the 200-day is going to be a big area of resistance until we get above it. I really can't be too bullish on MIR. Nonetheless, at least in the short term, the market structure is still very valid to the upside. We're putting in an ascending triangle. We're still in the ascending triangle. I would personally like to see us not go lower than 170, let's say 170, because I think if we hit 170, we could still have the possibility of bouncing around until we hit the apex of this triangle on the 18th of April. So either way, we're going to have a decision on what's going to be happening by the 18th of April. We're either going to have a move to the upside or the downside. I think we've been coiling up to the side for too long for us to kind of just trade sideways out of this. I think a big move is going to be coming from MIR. Whether that's to the upside, that's yet to be seen. Like I said, I really want to react to how we break out of this. If we do break below 170, then 158, 157, 156, whichever one you want to call it, round this 618 Fibonacci, let's call it 157. It really needs to hold. Because if we don't hold this, then, in my opinion, we're going to be having throwbacks to the lows. But so far, we're still in this ascending triangle. We still look good. We're above the 0.5 Fibonacci. We're above the 0.6. And like I said, we've backtested this multiple times and we're starting to head up. So while we're above this green support line, I wouldn't worry too much. If we start to break below it and come back down to the 618, I would be really worried, because like I'd said, I think we've back tested this like 6 times. This would be the 7th back test, and in my opinion that would really not fare well for the market. But nonetheless, your moon line is the 200-day. If we break above the 200-day, I mean, your first fib is all the way up here, a 70% increase. So I definitely think that could be a move we keep our eyes on. Nonetheless, I'm keeping my eyes on what happens with this ascending triangle. I'll update you if we break up, I'll update you if you break down. Once again, none of this is financial advice, just my opinion on the market. And you've always got to do what's best for you. Cowboy out. Peace.